Out of the entire private sector credit from the commercial banking sector, at least 14% is directed towards personal loans. However, individuals borrowing under this front have to contend with rather higher interest rates than business loans.
So the way we think about pricing is it's base rate, there's a default risk, liquidity premium, credit risk. So we have a build-up into how we get to the lending rate. So just because base rate remains flat doesn't mean that we don't have different views on the quality of the risk that we're writing.
All the same, financial advisors note that those sourcing out personal loans need to undertake a broad understanding of the market in advance,
which literally flows back to our personal loans, whereby their costs continue on to be volatile based on the conditions. So really, I think, especially for the corporate borrowers, they can be able to negotiate flat terms in terms of borrowing. And secondly, I would say at the moment that I believe it's not probably the right time for them to go into accessing credit.
The stress on the local currency that has since the start of the year depreciated by 4%, among other factors, is said to be partly responsible for the current upward movement of interest rates.
If you have a floating loan, floating rate, you're exposing yourself because, we're coming in an election year, you've seen what's happening on our currency, so you don't want to have such exposure. So the way to protect yourself against that downside risk is you don't want the interest rate to go higher and then your business is unable to pay off the loan.
And to avoid the common debt trap under the circumstance, please note the importance of such pieces of advice each other time you're seeking credit.